Ladies and gentlemen, I have come across the largest wealth transfer in the history of mankind. It's going on right now. And a lot of people think it's the baby boomers passing away, passing along their money to Gen X, the millennials, folks like that, right? No. I have found the biggest wealth transfer in history. It's going on right now. The electricians, the plumbers, the guy that works at Amazon, the teenage boys. Oh my gosh, okay? I come across this on X yesterday. This chick on OF made $83 million in the past year and a half. $83 million. She doesn't, what is she? Maybe 20, 21, maybe 22 years old. $83 million in a year and a half. That's insane. You got these girls talking about, I got $1.3 million in XRP, and when it goes to $10, I'm going to be set for life. It's incredible, man. Like, the biggest wealth transfer in history is happening right now. And everybody always wants to talk trash about the chicks, right? But I'm like, at some point in time, we got to look at the dudes who are all supporting this and be like, hey guys, like, come on, like, what are we doing here? Okay, like this is what we're up to. Come on, man. Okay, alrighty, folks. A lot to get into here today in this video. We got to focus on making money with our investments because, unfortunately, we're not hot little 19-year-olds who can make $83 million in a year and a half posting some pictures online. So we're gonna have to focus on investing here. Okay, a lot to get into in this one here today. Fubo. So big news in regards to Fubo stock and what does this mean for Fubo's future. So we'll get into that. That's going to be a big subject at the beginning here I want to cover. Tom Lee went on CNBC about an hour or two ago, spoke about where he sees the market headed from here. What do you think? Tom's going to be bullish? There might be a high probability of that. Then I want to go ahead and react to this one. NVIDIA stock can double from here, if not more. What? A double from here, if not more? That's going to be a fun one to react to. Brad Gerstner went on CNBC a bit ago, spoke about his opinion on NVIDIA earnings, where that stock's headed, and he always has interesting thoughts in general. A lot of stocks continue to run here, folks. I want to show you one stock specifically that's running very heavy. This stock almost never gets talked about. Shh. I want to show you it right now. Look at Winning Resorts. This is over about the last 2.5 months or so. Winning Resorts is up 52%. Now, it's also a dividend payer, so it doesn't even account for dividends paid. To illustrate how insane of gains this is over the past 2.5 months, roughly, for Winning Resorts, is it's outpaced AMD, which is up a shocking 45% in the past roughly 2.5 months. It's outpaced NVIDIA, which is up 26%, even the almighty Palantir, which was up 25% in the past 2.5 months. Wins doubled up that performance. And Google, which has been an extraordinary performer over the past, I would say couple months here, Google's up almost 22%, but that looks like nothing compared to Wynn Resorts. Like, Wynn Resorts is just on a run, man. And that's one of those stocks. When it goes on a run, it goes on a big boy run, okay? By the way, appreciate everybody joining me as always. One thing only I need from you guys. I hope you can do it for me, okay? Well, two things, okay? Maybe we stop the greatest wealth transfer in history. Maybe we do that, okay? And the other thing is smash the like button. That's all I need from you guys here today. I appreciate y'all for being here. If you want to be subscribed here to the Reaction channel, you can certainly subscribe. We are now at how many subscribers? I think it's 107,000 subscribers. So I appreciate y'all for being here. It's free to do that. And also, we got a massive deal coming up for the Labor Day. It's going to be for my highest end Patreon tier. $49 access to that, which is much better than spending it on these chicks. Some of the guys are spending it on, okay? And this, you actually get something valuable, okay? Not some pictures. You actually get my #1 best stock market course ever, Become a Master of Stock Market. You also get ability to see the stocks I'm buying and selling each week with screenshots and access to that Discord chat. A whole lot better than these chicks out here, okay? So, yeah, if you want to check that out, pin comment down there. Click on that, put in your name, and we can send a deal or via email or via text if you want to receive it via text, okay? Alrighty, guys. So, where do we want to start here? Let's start, by the way, SoFi. Oh my gosh. SoFi's running, man. Another 4% gain today. ELF is running. Another 3.5%. I just spoke about SoFi and ELF last night on the main channel. Like, geez, those stocks are just running right now. Okay. So big news in regards to Fubo here today. David Gandler posted this 2 hours ago on X, right? By the way, if you ever want to follow me on X, I always have it linked in the description area of all these videos, okay? But David Gandler posted this, back to our roots, more sports, lower price, introducing Fubo's new sports skinny service. Okay, this is pretty fascinating, right? So Fubo, when it launched in 2015, it launched with a soccer-focused live channels that cost about $7 per month. And then as Fubo grew, they added more packages, things like that. Now the company is going back to its roots in a way. Fubo Sports, a new skinny standalone streaming package with 20 plus sports-centric channels, including access to ESPN Unlimited, available starting September 2nd at a lower price than its existing packages. Fubo Sports will be priced at $45.99 for the first month and $55 per month afterward. Okay, hold on. Fubo. Wait a minute. I don't agree with this. This is exactly what I was speaking about on the main channel last night. Man, I hate this. I hate where they give you a teaser price. We're not doing that with the Labor Day sale, man. You sign up for $49, we keep it $49. It's not like, oh, it's $49 the first month, and then you get jacked up to $125. No, it stays $49, man. So I don't like that. I don't like that Fubo's like, oh, we're going to tease it at $45, and then the next month it jacks to $55, man. Like, come on. Like, just put it out there. Put it out there at the price, and it's going to be the price, right? Or if you want to give people a free 7-day trial or something like that, okay, fair play, and then it costs money. But I hate those little teaser things where they charge you one price and the next month they jack it up. Like, come on. But it's $10. It's nothing insane, but still. In addition to the live channels, Fubo Sports will include on-demand video, unlimited DVR, and family sharing features. While $56 monthly may not seem like a bargain, it's less pricey than many of the other paid TV packages. That includes Fubo's own plans, which can be $84 a month. I think my plan is like $100-something a month. I got like the highest end Fubo plan, right? So at launch, Fubo Sports will include local ABC, CBS, and Fox-owned and operated stations, plus additional affiliates in select markets. The lineup also includes ESPN, ESPN2, ESPN News, ESPNU, ACC Network, Big Ten Network, CBS Sports Network, Fox News. Fox News? The news channel? That's random. Okay. FS1, FS2, Fubo Sports Network, ION, NFL Network, SEC Network, and the Tennis Channel. Note the package does not include any channels from NBC Universal or Warner Brothers, right? So I think this is a pretty good package here overall from Fubo. I could see a lot of people being interested in a package like this. Fubo Sports subscribers will also have access to the recently launched ESPN Unlimited direct-to-consumer service, which includes ESPN Plus. The inclusion of ESPN Unlimited in Fubo Sports will initially be through authentication. Must log in through ESPN apps. Fubo is one of a few pay TV subscribers to have these skinny deals, right? Which we know Fubo's been getting closer to ESPN ever since the whole situation, right? So, my opinion on this is I think it will be big for Fubo over the next several years. Fubo is just going to have to make sure they market it properly. If they got to get the word out about this, right? Like, it's not like everybody's just going to magically know, like, oh, Fubo's got this plan for $50-something, and, it's going to cover most of the sports channels that people want. They've got to get the word out in regards to this thing. So they're going to have to market it heavy over the next few years, which will be costly, right? But at the end of the day, if they can bring in mass amounts of subscribers, it'll be well worth it. So they'll just have to market it through the right channels, and I think they're going to have to use social media as well. I think they've relied a lot on TV for actually ads in the past. And I think they got to get the word out also really on social media, right? I think they got to get the word out on podcasts. I think I would love to see them spend a good, they've got a lot of cash on that balance sheet now. I would love to see them spend, $20-30 million, especially around football season, around their skinny package on podcasts, on YouTube channels, on Instagram influencers, TikTok influencers that talk a lot about sports, right? They got the right audience there. Like, if no one's going to be watching some guy talk about what happened in the game last night on TikTok or Instagram, unless they're really interested in sports, right? So that's where they need to really double down, triple down, in my opinion. Spend a good $20-30 million on that over, a football season. And I think the results will be, pretty tremendous in terms of awareness and getting people aware, like, oh, Fubo is a place you go if you want to watch a ton of sports channels for $50 a month, right? So that's what needs to happen there. If they could do that, then I think the numbers are going to look phenomenal for Fubo for quite a while. Okay, what does this mean for Fubo's stock from here? I think it means nothing but good things. There's no way I could say this is a negative. Like, this is a huge positive. This is something we've been hoping for Fubo for quite a while, right? And additionally, obviously, with the Hulu deal and everything like that, like I just see, it seems like Fubo's on its way to 5. It's just a question of, is it going to 5 this year, or do we have to wait to next year? That's really the only question. Tom Lee.
I know a lot of people want your take on a video, and we'll get all that stuff. How has it been in April? You remain bullish even when everybody was running around with their hair on fire. Is it hard? Like, do people come at you and be like, how could you be so bullish all the time, Tom Lee?
Yeah, I think that we get more criticism than positive feedback to any of our views. I mean, if someone follows us on social media like Twitter, or if you look at the comments on our YouTube clips, or even sometimes unrequested inbound emails to our firm, usually it's criticism.
Yeah, it's amazing what people can do when it's anonymous, right?
Well, before we go further here, I'll tell you a Tom Lee story in a minute. Hold on, let me hear this part. I wanted to finish out this part, and then I'll tell you guys a Tom Lee story.
And they write in whatever. But those people, you've been right. I mean, you've been bullish. You've stayed long. You've stayed strong. What are you seeing maybe that some others are missing? I don't know.
Well, I think too many people are tied to their own biases. So like when markets were falling in February to April, then in their own portfolios, they were suffering damage. And as you know, that gets into people's sort of psychology, because no one likes to lose money. It's more painful to lose $1 than the joy of gaining $1. What we did was we took a step back and said, with all the forces at work, are we really going to drive the economy off a cliff? And if the answer was no, then we know that at those points of fear, that's when, as hard as it is to do, is you either have to hold on or buy. And that was our advice to clients.
Yeah. And is there anything that you see?
I mean, before I get to the Tom Lee story, here's the deal, okay? How do you get rid of that thought process of like, it hurts more to lose $1 than like the enjoyment of making another dollar, right? Listen, here's the way I view it, okay? Now, I've been fortunate to achieve a lot of great financial success in my life, right? Here's how I view it as somebody that started his career as a guy that was cleaning dishes at Einstein Bagels for $7.50 an hour, and then went to Walgreens where I made $8.25 an hour, right? And just kept rising the ranks and kept doing my thing and started businesses and all those sorts of things and just kept investing, right? Here's my views. It's a cost of doing business. You're going to lose money sometimes. You're going to get it wrong, and that's fine. Don't get emotional about it. It's like paying taxes. It happens sometimes. Sometimes people are so scared, I could lose money on this stuff. It's part of the game. Like, I started an app years ago, and I lost $750,000 on that app. It didn't work out. I spent $750,000 on the development of it. It didn't work out. And that was years ago. Think I think about that? I don't care. Like, it's just part of doing business. That's just part of doing business. It's the cost of doing business, right? And through that, I learned so many valuable things that made me so much more money than that $750,000. And same thing with stocks that went wrong. Like, yeah, I've lost money on some stocks over the years, right? You do this 17 years, you're going to lose money sometimes. You're going to make mistakes. You're going to, look at a stock and not think it's a big opportunity. It is going to be the big opportunity. You won't have invested in it. It's all fine. That's the cost of doing business. If you got to accept that. It's like, you got to accept that sometimes if you're, in the dating scene, your girl, a guy, whatever, like sometimes you're going to like somebody and they're not going to like you back. Okay, big deal. You got rejected. Part of the process. Part of the process, man. Like, what like people like overthink these things. And it's like, dude, that's just life. Like, cost of doing business. Tom Lee story for you guys. Listen, Tom Lee, prior to 2022, started getting very popular on YouTube and social media in general, with a lot of his bullish views on Bitcoin, on stocks, things like that. Okay. And he stayed very positive for a lot of 2022. They turned on him so bad. Oh my gosh. You should have seen the comment section on anytime Tom Lee went on CNBC from really like the first quarter of 2022 and after. Oh my gosh, they obliterated him. He went from like legend, like Tom is so smart, he knows everything, to, oh, they hated his guts. Oh, they made fun of him so much, right? So the moral of this story is it's going to happen again. I don't know when it happens. Maybe it happens next year, the year after, the year after. But, a lot of people are going to be making fun of Tom Lee again whenever the next down market is. People will be making fun of me as well, by the way. Don't think I'm immune to this. Like, market goes down a ton, people are going to be trash talking. Oh, your stocks are going down. Oh, your stock went down. Like, same thing. That's that's the cost of doing business also. Like, but it's silly. It's silly. It's sad for me to see that because I'm like, oh, like, society's not very intelligent. Like, they can't look past a short-term time frame and understand, like, the bigger game that's being played here. And I'm like, oh, that's depressing. Like, it's like people don't get it, right? Like, these people should be buying hand over fist, but instead they're busy talking trash in the comments, like, making fun of somebody. So just understand that's all going to come back, right? I don't know when it could be 3 months from now, 3 years from now, 6 months from now, 6 years from now. But, all of us that buy stocks are going to come back making fun of us, like, at that particular time. And it's like, dude, how many, like, you could make $1 billion in profits and, stocks go down and they're like, oh, you're an idiot. And it's like, okay, whatever, man. So, cost of doing
in your
business.
research, Tom, that would imply that this momentum trade, if it is indeed a momentum trade, is going to end anytime soon.
We don't. We for instance, if we take AI as a thought, and we, let's say, overlay something like the exponential growth of the wireless industry, that was a 20-year period when the number of users went from 37 million subscribers to 7 billion. We don't have 7 billion ChatGPT users, and we don't have 7 billion robots. So I think if not yet, that's right. And so if someone's trying to ring the bell at the top for AI, they're underestimating how quickly penetration grows. We're probably in the first quarter or first third of that cycle for AI.
Okay, if I had to take the other side of that trade, and who am I, but we'll talk about this, by the way, with Christina Partsinevelos coming up soon, is that people are spending a lot of money on AI, the Metas of the world, the XAIs, the Googles. They're buying a bunch of NVIDIA chips. They're building out power data centers, and all that's inflating the market. Are companies making any money from AI? They're spending a lot, but are they making any?
That's a great question.
Because if they're not, maybe they stop spending so much.
Well, I think that when you look at the early builds of any new wave, and I think wireless is a good example, first is the infrastructure that gets laid. So that's the LLMs and the data centers. And then what happens is you have critical mass, and so then the application layer starts to emerge. That's exactly what happened with wireless. And then that's when, not until 2007, that the iPhone came along, 15 years into that cycle. So I
was thinking more like Global Crossing-ish.
Yes.
Right? Somebody paid, and if you're really young, Global Crossing was a company that spent billions and billions and billions of dollars laying actual physical cable around the oceans, the world, to which eventually Global Crossing went bankrupt. But those cables are still being used today. Thank God.
Yeah, all that fiber.
They spent that money to do that, even though it sort of cost them the corporate entity. You're not seeing any of that now.
That's right. And in the Global Crossing case, the second owner of the hotel made a lot of money.
Yeah, second owner.
So I think that we're now at the phase where we're going to be thinking about things of like security around AI, proof of human or whatever. And we're going to see companies leverage AI like the JP Morgans and the Goldmans. So there's another wave of opportunity coming where it's exactly what you're saying. We got to the point where AI is good enough that companies can really now actually improve their business strategy. So I think there's still a lot of positive to come.
Yeah, Tom Lee's really bullish on the financials, I've noticed, right? Which is interesting because if let's say we're mid-economic cycle, okay? And this is a big debate if we're early economic cycle, mid-economic cycle. Some people feel like we're a very late-stage economic cycle and we're about to have the next crash, right? There's strong debates to be made across the board. But let's say hypothetically we're mid-cycle. If we are, then financials are actually a great play for the next couple of years, if you believe that. Because financials usually run huge into that late stage of the cycle, essentially. Then they can face a lot of problems after the late stage is over, okay? But that run-up from mid-stage to late stage of an economic cycle is glorious for financials. They make by far and away the most profits they've ever made in their company's histories. And you get so much momentum in the stocks because their profitability is skyrocketing so quickly and people want to be in them, right? The only exposure I have to anything financial related like that is SoFi. I like SoFi more than the other players because of the long term. Now, the short term, also SoFi can produce likely far better returns as well because of the ability to grow. Like, if you look at SoFi's revenue, like SoFi can grow their revenue like 40%. Is JP Morgan going to grow their revenue 40%? Not likely. Not likely. Is Goldman Sachs? Not likely. Is Bank of America, Wells Fargo? No. Those ones could maybe have their earnings per share go up a lot in a late stage cycle, right? But yeah, it's not possible for those companies to grow at those sorts of rates unless they acquired some other big, massive financial institution or something like that, right? All right, next one up here, NVIDIA stock can double from here. Oh my gosh, if not more.
Who just raised his price target, joins us now. Very good morning to you, Ben. Thanks for joining us. Headline, quick snapshot on these numbers.
Well, I thought they were very solid. I think that the reason the shares are trading a little lower is that they didn't include China in their guide, and that, some people were hoping there was some China sales in there, maybe a little firmer stance that China sales could get going. And then the sales of their new Blackwell chip were actually a little below what some folks estimated because it takes time to ramp that product. But their guidance was really solid. The core growth outside of China is just really good, mid-teens growth. And then there should be more great growth in the fourth quarter. So I think we're all systems go. And then one final thing, Will, they did mention on the call a very huge TAM, total addressable market, by the end of the decade. This is something we've been calling for. That really implies revenue by the end of the decade, if they grow along with the industry, to be over $600 billion, which is just a huge number, which means the stock can even double from here, if not more. So we're pretty excited about the results, although we understand why it's probably taking a breather. But we're not a day trader here.
I'm really interested in touching on that TAM point. And it comes back to another question I had, which is, at the moment, the scale of concentration of their customer base, which, they don't break out who is who, but we were discussing this earlier with Christina, 44% of the data center chip sales were two customers, probably Google and Microsoft. Can the TAM really grow to be that big based on the advantage that those two or three customers are going to have building their own products over the next couple of years? If they're the only ones grabbing these chips in large numbers, do you think that in fact the TAM's going to be a lot smaller because there's only going to be two or three buyers in a few years, because those hyperscalers competition is going to evaporate if they can't compete and get their hands on the chips in the short term?
Yeah, well, it is something we grapple with quite a bit, the customer concentration and being like half the sales being 4 or 5 customers. But the worst thing that would happen is if one broke away and won. So if one company were running away with AI, and then maybe one company would be able to hoard all the spending and whatnot. But it doesn't look like that right now. There's very healthy competition among the top 4. And
so that's a risk factor, but I don't think that's the most realistic risk factor. It's actually a much scarier risk factor for NVIDIA, in my opinion. And that is that we actually have a big recession in the next couple of years. Maybe 26, maybe 27, something like that. Maybe that doesn't happen. But I'm just saying, like, if we're going to run risk factor, I think that's the biggest risk. Because if that happens, what's going to happen to Meta's revenue, Google's revenue, Amazon, all these companies that are spending a fortune? Revenue is going to dip quite dramatically, right? What would then happen is those companies would all cut their budgets for that next upcoming year substantially, which would kill off all of the momentum in NVIDIA's business. That's the biggest risk factor, ladies and gentlemen. You get a recession in 26, then 27. Like 27 NVIDIA numbers, not going to look good. You get a recession in 27, then 28 numbers for NVIDIA. Not going to look good. And then they could have to reset and reprice their chips moving forward after that, essentially. So to me, that's actually the biggest realistic risk factor for NVIDIA. Because the reason Meta's able to spend so much, Microsoft's able to spend so much, Google's able to, is if you look at their revenue growth, 23, 24, and here in 25, very strong revenue growth from all these companies. Very strong. Like double digit. Some of these companies, Meta's been pushing 20%-ish revenue growth the last, few years now at this point in time, right? Microsoft's had extremely strong revenue growth. Amazon always has strong revenue growth. If, that goes the other way, all of a sudden these companies aren't going to be up in CapEx budgets. If anything, they'll be cutting. And that's going to hit NVIDIA the hardest by a mile of anybody, because they've been the biggest beneficiaries of this whole situation.
And then others, OpenAI is there, as well as a few other mega startups that really aren't startups. They're actually almost hyperscalers themselves. And then there's the notion about sovereign AI, where you see these huge Middle Eastern and European economies needing to invest in their own infrastructure due to not only national interest in their economies, but national security. So I see it being very big. I don't want one company to run away with the thing so that they hoard all the spending. And it doesn't seem like it's going to be like that right now. So that's a good thing. And customer concentration hopefully actually broadens over time with the sovereigns and some of these emerging companies like OpenAI, Anthropic, and others that are going to be well capitalized for a long time. A lot of folks, if these companies IPO'd, there'd be a line down Wall Street to invest. So, I think we're going to be okay. But yes, it is something we monitor quite a bit.
Ben, what do you think NVIDIA's future looks like in China? I ask because they said on the call that the Trump administration still has yet to codify the 15% of sales that they have for some of those chips that are purchased by China. Beijing has encouraged a move away from U.S. technology and AI systems. So, how do you see that all playing out?
Well, there's probably in the stock a little bit of optimism around China still, and the stock ran up on that, but it's not in anybody's models mostly, or it's in some folks' models for the next few years, but most of the street doesn't have it in there. And so the risk you have in not owning the stock is that street numbers go up over 15% over the next few months if things calm down. Now, that being said, most of the numbers on the street are going to reflect everything outside of China, which is still very robust. And so with regard to China itself, it does seem like there's tensions a little bit like on both sides where right now, it does feel like a lot of this, for the H20 at least, is in the CCP's court, where there was some reaction to some comments and whatnot that, they were going to be using some of the lower end chips, and whether they want China to, and the companies there to be buying the lower end chips after someone said something about it, et cetera. And I just think that the two countries will work this out. I think that there's likely a trade deal coming. And this will work itself out. I think President Trump is very commercial regarding Jensen's views that the world needs an American stack that can dominate the AI world, not just the United States, and that it's international interest actually to do so that the Chinese don't create a Chinese software stack that runs AI that they can export to our allies. So I think it will get worked out. I'm not sure if it's by the fourth quarter or some point next year, but we're optimistic that it happens. And we know there's some hawks in the Trump administration, but it does seem like President Trump is working with Jensen actually commercially on this. I just hope the two countries work it out and we can see it kind of materialize at least by the fourth quarter, because then that's another positive.
Ben, here's just maybe it's philosophical, maybe it's technical. The idea that NVIDIA sells into China and that somehow pushes Huawei out, I accept that it would push out their market share. The question is the mother of invention. Do you not believe that Huawei and some of these other chip makers will ever be able to catch up, and that therefore the incentive won't be there for them to do such a thing, nor that the Chinese government would want to almost incentivize them to do such a thing? That's the question about this sort of central issue around whether we should be selling in or not to China, and whether we actually, if we do, we somehow push them out.
Andrew, the world of AI is about developers. And the reason we, a few years ago recommended NVIDIA and what we saw, or at least what we think, is that they have the most developers developing AI applications on their platform. You win the developers, you win the race, okay? Apple won the mobile race in terms of profitability, not because of market share, but because they had the best app store that monetized application developers' ideas. In a way, NVIDIA's like that. They have the best ecosystem where you will monetize your AI applications if you use an NVIDIA stack, period, full stop. You win that, you win the race. And, Huawei and Chinese companies probably don't have the same advantage that NVIDIA has. And these little decisions NVIDIA made maybe years ago turn out to be huge outcomes later in a natural market environment. And we would like to see that proceed. And I think Jensen is advocating that the world running on NVIDIA's stack is a safer place. China's developers, while they could get pressure from their government to do a certain thing and try to use something else, if the NVIDIA stack monetizes AI, they will use it. And that's what we're risking here. Would you rather have NVIDIA control the AI stack globally or somebody that may not be on our team? And I think that that's the question here.
So in the last 20 seconds, just sum it up. What's your price target?
Price target 240, and we'd be buyers on weakness and think that they're on track. The sequential growth shows that there's probably not much to worry about here.
Big call, 240. So what he just laid out there, this I have to talk about AMD, right? Because what he just laid out there is exactly why I never believe AMD is going to overtake NVIDIA. I don't believe that. Like I just, as somebody that's extremely bullish on AMD, and I think AMD is going to produce far better returns than NVIDIA over the next 3 to 5 years, and it's not even going to be close. I don't expect AMD to ever overtake, NVIDIA. I wish AMD could overtake NVIDIA and become a $5 trillion, $10 trillion company. That'd be amazing. Like my investment, oh my gosh, like so much money I'll make. I don't think that's ever happening. Like AMD's best case scenario is it becomes like $1 trillion type company, right? Joins $1 trillion boys club essentially. But I don't ever oversee them taking NVIDIA because of the software side of NVIDIA, because of the developer side of NVIDIA. I don't think they can ever overtake NVIDIA. Like I said, I would love to be wrong on that. I would love AMD to be a $5, $10 trillion company, but I don't see it happening. And so NVIDIA's always got that competitive positioning, and it's phenomenal. And that's going to produce in NVIDIA, great profits and revenues for years and years to go in the future, right? Until we get the next down cycle, which is likely going to be because of a recession. It's likely not going to be because people are fearful of AI spend's not going to be there. It's likely going to be a forced situation. That's what happens a lot of times. You get a forced situation, you get a forced recession that happens, and then all of a sudden, that changes the dynamic there in a major, major way. Okay. All right, next one up here, Brad Gerstner, Altimeter Capital. Let's hear what he has to say about NVIDIA and other subjects.
It's good to be here, Scott. And, it was a banger of a report by NVIDIA. Obviously, the market's moved a lot since, remember.
Hold on, Brad Gerstner. Wait just a flip and flapjack and moment. All due respect, sir. Listen, that was not a banger report for NVIDIA. That was a good, solid report. It was not a banger. A banger is when you come in and you crush it. You crush analyst expectations on revenue. You crush analyst expectations on margins. You crush analyst expectations on earnings per share. Jeremy grades your income statement A+. That's a banger. NVIDIA came in with like a solid report. They slightly beat revenues. They slightly beat earnings per share. Margins, I don't even know if they beat on margins. Thinking about it now, their margins were quite a bit weaker than the previous year, gross margins. So, you know what I mean? It's not a banger report, dude. It was like a good, solid report. Like they did slightly better than what everybody expected. That doesn't make it a banger. Come on. NVIDIA's had so many banger quarters where they come in and just knock it out of the ballpark. You're like, oh my gosh, that's a banger quarter there from NVIDIA. This was not one of those. Come on, Brad Gerstner. All due respect.
Earlier this year, the stock was down at 114 on the DeepSeek scare when everybody freaked out and said we're going to have intelligence without having to have all this compute, which was clearly wrong. Freaked out again over tariffs in April. The stock got down to, I think, $95 a share. So the stock had gone from $95 a share to basically $180 a share, and they delivered a quarter that was a banger quarter. You know, look at it. It's 56% growth. This company is accelerating at scale. It's the largest company in the world. And you know, not only is it the largest company in the world, it's an incredible American natural resource. The fact that it's here, the fact that we're leading in AI, it's the most important AI company in the world. Margins at 73%. They just guided to 54 billion ex-China. Right. And there were some people who thought it could be even bigger, but the stock's essentially flat today. But imagine doing all of this. This is a company that is accelerating at scale, the largest scaled build out of compute in history.
Hold on, guys. I don't want to, he's talking so many different points here. I don't want to just like bypass something very important in regards to stock price move. This is fascinating. You know why it's fascinating? The stock basically didn't move today. And so many people were playing call options, out of the money call options, out of the money put options. They thought this stock, you know, bearish folks thought the stock was going, you know, 165, 160 this week. Bullish folks thought it was going 190, 200. It didn't do a thing. It didn't give anybody anything. Like literally the stock today, let me see here. Like what was NVIDIA stock price up or down here today? Let's take a peek. NVIDIA, oh my gosh. NVIDIA was down 0.7%. 0.7% today. Hilarious. Unless you got out of the money call options or put options that are expiring this week. That's just another reason I don't play that game, man. It's so stressful. You know, you're expecting NVIDIA to make a big move and then it goes down 0.7%. Like, could it have been a more lame response from the stock on their earnings? Like, oh my gosh, you don't play these games, man. You end up throwing away so much money, right? And then you might think the other side. You might think, okay, you know, I can sell calls or sell puts or something like that because the stock's not going to move, right? And then you end up getting screwed and it does move huge and then you have to, you know, make a big payout on the other side. So don't play those short-term games. Focus on long-term investing. Got a big portfolio you need to hedge every once in a while. Fair play. But yeah, to play these earnings trades, devastating, man. Devastating. And you know what the worst one is? Some people were expecting they didn't have a bet on long side or they basically just thought it was going to be a volatility move. Like NVIDIA's going to move big one way or another. So the worst one is they buy calls out of the money and they buy puts out of the money, thinking, oh, NVIDIA's going to move huge, so I'm going to buy calls out of the money, puts out of the money. One of them is going to hit, and then you lose both sides. You lose both. Devastating.
This is a company that is accelerating at scale, the largest scaled build out of compute in history, despite all the wrangling on tariffs in China. Despite the transition and the ramping up of a new generation of chips in Blackwell that a lot of people thought they couldn't pull off without some major hiccups. And, you know, I kind of laugh, Scott, because I look back. I remember at the end of 24, I had some friends who said, we're going to short NVIDIA because they can't possibly grow this fast in 25. And they blew away expectations in 25. And now some people are wringing their hands about 26. And what did they hear on the call yesterday? Jensen said, you know, when he was on our pod last year, he said, we think the build out between now and the end of the decade is $2 trillion of total compute. Last night on the call, they said 3 to 4 trillion of total compute. He told us that inference was going to 1 billion X, right? Why do we have this massive build out? Because inference time reasoning has led to an explosion in inference. Think about this stat. A year ago, Google per month was doing about 9 trillion tokens a month in terms of inference generation, right? Compute generation. Today, it's 980 trillion tokens. So from 9 trillion to 980, it's a 100x increase in a year. You have to build compute in order to do that. So the world is massively supply constrained when it comes to compute. They're 50, you know, he said yesterday, the world will continue to grow at 50%. So think about this. If you grow, and people asked him, are you going to grow at 50%? He said, well, I think we're going to maintain market share. So the consensus for next year is 250 billion of data center revenue. If they grow at 50%, that's going to be closer to 300 billion. or closer to $8 a share, right? And $200 at $8 a share, is about 25 times. So below market multiples in terms of PE. So here's a company that I think is hitting on all strides, has an incredible leader. I think they delivered the quarter they needed to deliver.
Let's talk about a few of the issues.
Let me push back against Mr. Gerstner here, okay, on a few things, okay? One is, based upon the way he was talking there, you would think like Jensen's never made a prediction and he's wrong before, right? Listen, Jensen's made plenty of predictions, and he said this was going to be the next big thing, this was going to be the next big thing. Like some were the next big things, others weren't really the next big things and the next huge opportunities. Okay, so let's not act like every prediction Jensen ever makes. Like, he's going to be very bullish on his business. Like, this is his company. Like, this is his baby. Like, he's always going to think his baby's always going to win, right? No different than your kid. You always think your kid's going to win the basketball championship or whatever, right? Like, it is what it is. Additionally, he makes it sound like, these companies are just going to have to spend, like unlimited amounts of money or something like that. They can't. They literally can't. Like, you look at Meta, Google, Amazon, all these companies, they have massive CapEx budgets already. They can increase them a little bit in 26, maybe increase them again a little bit in 27, but they can't increase them forever. Like, eventually it gets to be too big where the shareholders say no. And as soon as the shareholders say no, guess what happens? Like, eventually Meta's going to go down, right? Eventually Google stock's going to go down. Amazon stock's going to go down. The shareholders will eventually say no. That might be next year. That might be 27. That might be 28. Like, we'll see. And at that moment, the shareholders always decide. You got to understand that. The shareholders are always the decision makers. Because if the shareholders get mad, they replace a board of directors. Board of directors don't want to lose their positions at these companies. I don't think anybody on the Google board of directors, Meta, Amazon, all these companies, go through the whole list of them. I don't think any of them want to lose their positions, right? They all like collecting those very nice, some of them get $250,000 a year, $500,000 a year to sit on the board of directors, right? Plus they get all the prestige and connections that go along with that. It's a big deal. Those folks are the ones that decide the top executives, right? So if the board of directors all of a sudden starts feeling pressure from the shareholders, that goes right down to the executives. Executives start making decisions that are aligned with what the shareholders want. That day's coming. I don't know, once again, if it's next year or the year after, but it's coming. And so these companies can't just increase forever. And additionally, you always have macroeconomic effects. Like, eventually we're going to get a recession, a big recession. Not like a little baby. No, we'll get a big one eventually. What year? We'll see. But when that does happen, these companies' revenues are going to get hit. Some will go negative. Some revenues will go down for some companies. Others will go to very slight growth. And you think they're just going to spend unlimited amounts of money when their revenue is in a bad spot, when the economy's in a really tough spot? No. So, I think Brad made a lot of really strong comments there, but you got to push back against some of those.
Jensen Huang said that bringing the Blackwell chip to China is, quote, a real possibility. This issue has obviously been in the headlines lately. Enough that you posted on X earlier today that says now is a critical time for the U.S. government to accelerate and U.S. AI companies to rapidly expand and compete around the world, including NVIDIA chips in China. Ceding China and its massive AI ecosystem to Huawei and dragging our feet on licenses will only hand more market share to the China AI stack. I guess after reading that, my question is to you, are you saying that the government is in the way here unnecessarily and needs to get out of NVIDIA's way?
Well, listen, I think over the last couple of years, the government has, followed a course of action that they thought was correct, but it wasn't, right? The binary diffusion rules created massive obstacles to the diffusion of U.S. AI technology around the world. Those have now been repealed. David Sachs is kind of leading the charge as the head of AI strategy in the U.S. government. And the president himself has now signed an executive order that says we need to accelerate licenses and we need to accelerate the U.S. AI stack around the world. It's existential. We want more market share. Just like we wanted U.S. internet companies to win around the world, we want American AI companies to win around the world. And you can't win around the world. And Jensen has made this point time and again, and it's true. China is 50%.
Oh, man. This is why I'm so happy I don't go to one political side or the other, because Brad Gerstner just totally sidestepped trying to criticize, obviously, the Trump administration and some of their moves. He doesn't want to go there, right? Obviously, if you know Brad Gerstner, he's clearly on that side, right? And so I love how he just boom, beat down Biden and then just sidestep Trump and just, and now he's on to the next thing. It's just, it's so sad.
Of the AI researchers in the world, right? We want Tesla competing in China. We want Apple competing in China. And we want NVIDIA competing in China and winning over the hearts and minds of those AI researchers. If we cede China to Huawei, it makes it vastly easier. And we already know the U.S. has underestimated Huawei's chips. It makes it vastly easier for Huawei and the very, very sophisticated model ecosystem they have with things like Quencoder or things like DeepSeek to win around the world. And so the U.S., I think, was going too slow. We're accelerating. But this is a reminder that we need to do it. And we see some of this wrangling going on in Washington. But I think the president, he said again yesterday that he has a great relationship with Xi. I think we're going to get a big deal done with China. I think it will include Blackwells in China, and it needs to include Blackwells in China. In order for the U.S. to maintain the lead. So remember, the numbers that I quoted at the top of the show, Scott, all the guidance for this company excludes China. China is a $50 billion market for NVIDIA unto itself. So I believe that the probability...
All these guys are so compromised. Oh, my gosh.
They're going to be able to sell chips in China is north of 50%. They already can sell H20s in China, and I think they ought to be able to sell a competitive Blackwell, deprecated Blackwell chip in China as well, and I think they'll be able to.
And as a shareholder, you're okay with the government taking a piece of those sales, if that's what it amounts to, as it has apparently with the H20?
Listen, I think it's an unusual tactic, but this president has said himself, if you want to understand me, you need to understand that I'm a deal junkie, and so I'll leave it to Jensen and the president to make that deal. For me, what I think is.
Oh gosh. So compromised, man. I'm sorry, you cannot be a capitalist, and you cannot care about the fundamental values of America and then be okay with something like that. So compromised, man. It's so sad. It's so sad because these individuals, they get so caught up in their side, whether it's the blues or the reds, and they just won't question anything. If that's what they want, it's okay. And let Biden have done the same thing. And I would have loved to hear what Brad Gerstner would have said about that. Oh my gosh, so compromised, folks. Don't get compromised, please. Please. It's not healthy for you, okay? Appreciate y'all for being here. As always, thank you so much for being here, folks. Once again, we got that Labor Day sale coming up here for the highest end Patreon tier. That will be pinned comment down there. If you want to receive that via email, via phone number, we can send over that deal when it drops. And that will be for my number one stock market course ever, Become a Master Stock Market. Ability to see the stocks I'm buying and selling each week in the Patreon, as well as full access to the Patreon Discord chat. This is not my private stock group, so don't confuse it with that, but it is my highest end Patreon tier. Much love and have a great day.